After over 9 years of trading and trying hundreds of different strategies, I realized that the one thing that truly matters is probability. If you can understand the expected move and the probability that a stock has to get there, you're then able to relay that into a profitable strategy by just using simple risk to reward. So what I did was I built a script that visually shows you those probabilities in real time. In this video, I'm going to give you this probability chart for free. I'm going to show you how it works and how to use it in your trading. So by the end of this video, you'll understand how to structure your trades using probability instead of guessing. And I'll even show you a 1-month backtest to prove that using probability with any type of trading strategy gives you the edge that you've been looking for to help you find that consistent profitability in the stock market. Now, the first thing you want to do is pull up a 1 minute 30-day time frame. Now that means that each candle is going to represent 1 minute of time. Now, once you've installed the probability chart, I will cover that at the end of this video. You're just going to look for a TDT probability chart. It's going to be under studies. And again, you can find studies right here. This is on the TOS trading platform. So you got the probability chart set up. You can leave it as default. You don't need to adjust any of the settings or length inputs. It's going to be set as default for 30 days and you're going to hit OK and apply. So instead of guessing where price might go, what we've done is we've built this visual representation showing you the exact chance that a stock on that given day, for example, BABA, will trade. And so we know by looking at the probability chart here, we can see on our right-hand side, we've got rare, we've got moderate, and we've got conservative. Now, based off of that stock, every stock is going to trade different. So some stocks are going to have more volatility. They're going to move more. And at the beginning of every trading day, the probability chart is going to recalculate where those levels are going to be set on that given day. So these green areas right here, they're really high probability areas where more than likely during that day that stock will trade into. You could see off the open on BABA, we actually ended up trading into our green zone just for a minute there before working off of it. Now we traded back into our green zone, traded slightly above. We had our red 164.65 acting as a resistance area. And then we traded back into our green zone again. And now you want to think of these probability areas acting as support or resistance, because the smaller the win rate, we could see the win percentage here, the less chance the stock is going to trade up to that area. And we could see how that red, that's going to be our further outmost probability level, our rare high. That means that there is a rare chance that today BABA would trade up to that 164.65. We know that there is a 33% chance that would happen. Now on the downside, we could see our rare level on the downside. We know there's a 37% chance BABA will trade down into this level. So those are going to be our further outmost levels. And then on the inside, we've got moderate. We can see there's a 57% chance that BABA is going to hit 160.05 to the downside. And then on the upside, we can see there's a 50% chance that BABA is going to hit 163.73. And then obviously our conservative, there's 80% chance we're going to hit that level today. You can see we hit it. And then there's a 70% chance we would hit this level today. And you can see we hit it. So when it comes to structuring your trades, you want to overlay the probability chart to understand if you are just assuming a stock will get to a certain price, well, what is the actual chance? What is the actual probability that that is going to happen? So just to summarize, so far every day, you're going to see these levels plotted on your chart and they're going to be calculated at open. We've got our conservative levels, moderate and rare levels. Now, each level represents a win rate probability, right? We have a win rate attached to that probability, or the win rate is the probability, right? And again, this just means that over the last 30 days, price has reached these levels 37% of the time or 80% of the time. So if you enter a trade off the open, you immediately know which targets have the highest probabilities, which targets are more aggressive, and like statistically, where price is expected to reverse. So for example, if I buy calls off of the open and I target the conservative level, I'm essentially trading with a very high probability outcome because there's a 70% chance that if I bought calls, I will hit my take profit. Same thing goes if I bought puts off the open. There's an 80% chance I would hit my take profit. And again, without probabilities, most traders are just guessing. Traders use support and resistance levels without understanding the actual likelihood that that level is even going to be hit. So this indicator solves that problem. It shows you real probability levels using actual historical data. 30 days is recent enough to reflect how that stock is trading now. But again, it's long enough to provide more realistic and reliable statistics. If we're only going to use 5 days or 10 days, that's not enough data to set probabilities based off of, right? And make a trade plan based off of those probabilities. Trading becomes a lot easier when you start trading with probabilities instead of emotion. And I put this into example every single day over inside my mentorship. I'm trading live in front of hundreds of my students. They're able to see the trades I take and essentially copy those trades, make money alongside myself, or lose money as they learn this skill, as they learn how to trade. There's obviously a whole lot more that goes into trading than what I can fit in a 10-minute YouTube video. So if you are interested in trading with me, I'll put a link in the description below to my mentorship. Now, again, these green zones, they're really high probability areas that stock is going to spend a lot of time trading in. So with AMP, for example, if you wanted to just keep it really conservative, you would have gone long off of the open. And you could see with AMP, for example, we've spent the majority of today trading with inside this green zone. Like, yes, we did slightly break outside of the green zone and got close to our bottom green zone, but then we ended up bouncing off and coming back into it, okay? Now, if you were to say, hey, I think I want to go short on this stock, well, let's pull up CMS, and you would have bought puts off the open. You would have traded into your high probability zone there. We knew that the chances of us hitting that green line were 77%. Then you could be like, okay, at this point, well, I've got 63% chance of hitting our yellow line and then only a 33% chance of hitting our red line. And you can structure risk to reward around this because we know that, let's say on average, our trades are going to hit our conservative level to the upside or our moderate level to the upside. And look what happened. We came down into our green zone. We traded in our green zone for quite some time. We broke down to our red level, and look how perfectly this probability zone at 71.75 held. Look how well that held, because think about it like this. We knew there was a very low chance, 33% chance we would hit this level. And if we did, well, more than likely that would act as a support level. And look at that bounce right back into our green zone and then right back up into our upper green zone here. Boom. Because we knew that there was 80% chance of hitting this zone today. So if you're long, these levels are going to act as support. If you're short, these levels are going to act as resistance. Our green zone will be an anchor, if you will, that we'll often trade into multiple times. And if you want to have a really high risk to reward trade where your risk is, in relative to your reward, much more, or on the other hand, maybe your risk could be, much less in relative to your reward. So structuring risk to reward using these levels, if we know that there is a 30% chance of hitting this level if we were short, but there's a 43% chance of hitting this level if we were wrong, we can see that the last 30 days is more biased toward taking longs. Whereas we would have a higher win rate going long on CVS instead of going short. Look at that, 83% versus 67. So if we just went long here, boom, we know that 83% of the days over the last 30 days, we would have hit this level. Now, obviously, CVS did trade down today, so we always have to keep in mind that if we are wrong, well, now we have to look at setting a stop. So let's say we would have our take profit at maybe moderate because we've got a 70% chance of that level, and we could set our stop loss at conservative because we have a 67% chance of hitting that level. So our reward is still more than our risk, and our probability is even higher, right? We've got more space to cover to get up there to our take profit at 78.36 than we do to get down here to our stop loss at 77.13. So yes, you could use the probability chart to structure and take a trade solely, but ideally what I would like to see you do is overlay this on top of an existing chart and an existing trade plan that you have. And as promised, here is the 1 month back test using the probability chart. And you can see here, the equity curve obviously is going to represent how profitable the system is. And you can see nothing's going to go straight up, right? Like we started at $0 and we went into some drawdown right away. Was down about $800, recovered up about 3K, came back down to about 1,500, and then you could see here, ended up closing the month at just about 4,300. And you can see here the consistency, and that was over 87 trades with just about a 53% win rate. Is now keep in mind, depending on how much you trade with and how aggressive or conservative you're gonna be, that's gonna make a big difference. That could have been a $30,000 or $40,000 month if you traded with a lot more capital. But that was just a small account to show you that it is still a profitable system overall just by looking at the equity curve. Now let's talk about how you can actually get access to the probability chart. So what I've done is I've gone ahead and I've put a link in the description below. You're going to click on that link. It's going to take you over to Discord. Once you join our free Discord group, you're going to see a channel called Indicators. You're going to click on the Indicators channel. You're then going to have a link. And when you click on that link, you're going to see the Resources channel. Under Resources, you're going to see Trading Indicators. If you click on Trading Indicators, you're going to then click on the probability chart link. It's going to take you to this site here, and you're going to copy the link right here. You're going to open Thinkorswim. Within Thinkorswim, you're going to go to Setup, and you're going to click on Open Shared Item. You're going to paste that link in there. And then again, if you go to your studies here, you should be able to type in TDT and pull up the TDT probability chart, double click that to apply, and you are ready to go. Make sure you're on a 1 minute, 30-day time frame. Click the link in the description below if you want to join my mentorship and trade live with me every single morning. Subscribe for more videos, and I will see you all in the next one.